These are the cumulative inflows into Bitcoin ETFs. Bitcoin's launched in January of 2024. Most people know this story by now, but there have been 9,000 ETF launches in US history, and the number one ETF launch of all time, out of all 9,000, was the Bitcoin ETF. And not by a small factor. It pulled in $36 billion in assets in its first year. If you look since the Bitcoin ETF launched, and you look at the amount of Bitcoin that was produced by the network produced 360,000 Bitcoin, and ETFs bought 700,000 Bitcoin. I'm a CIO, so I do complex math. 700,000 is more than 360,000, and so the price of Bitcoin has doubled since the ETF launched.
Let's start with Bitcoin. In January 2024, spot Bitcoin ETFs launched in the United States. At the time, many people assumed this would be just another ETF launch. That assumption turned out to be wildly wrong. There have been over 9,000 ETF launches in US history. Out of all of them, the number one ETF launch of all time, by a massive margin, was the Bitcoin ETF. In its first year alone, Bitcoin ETFs pulled in $36 billion in assets. To put that into perspective, the second largest ETF launch in history was the NASDAQ 100 ETF, known by its ticker QQQ. That launch brought in about $6 billion. So Bitcoin didn't just win, it won by a factor of 6. That kind of demand is almost unheard of in traditional finance, and it immediately changed the supply-demand balance of Bitcoin itself. Before we go on, just a quick reminder, liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support. Let's continue.
What to expect from ETFs going forward? Why will they shape the returns of Solana? In part, why would they contribute to those returns? I thought I would start with this. These are the cumulative inflows into Bitcoin ETFs. Bitcoin's launched in January of 2024. Most people know this story by now, but there have been 9,000 ETF launches in US history, and the number one ETF launch of all time, out of all 9,000, was the Bitcoin ETF. And not by a small factor. It pulled in $36 billion in assets in its first year. Number two on the list, which is the NASDAQ 100, many people know the ticker QQQ. Number two on the list did $6 billion. So it was the most important ETF launch of all time, not by a little, but by a factor of 6, which is pretty phenomenal. We've had steady monthly flows, not exclusively monthly inflows. Every few months, there are monthly outflows, but mostly monthly inflows to the tune of $4 or $5, $6 billion a year. And this is why it has an impact. If you look since the Bitcoin ETF launched, and you look at the amount of Bitcoin that was produced by the network produced 360,000 Bitcoin, and ETFs bought 700,000 Bitcoin. I'm a CIO, so I do complex math. 700,000 is more than 360,000, and so the price of Bitcoin has doubled since the ETF launched. It can be as simple as that. I don't like to show many Ethereum slides, but it makes the point. I'm getting to Solana. The same thing is true with Ethereum ETFs. Here are the monthly flows, much lower than Bitcoin, but still significant. Here is the supply of ETH since Ethereum ETFs launched versus the amount of ETH that ETFs have bought, and the price is up as well. Here is Solana. You can see it's following a similar pattern. You'll see that the chart has sort of two phases. There was an initial Solana ETF, which wasn't in a traditional structure. Bitwise launched BSOL on October 28th, and you see it's been significantly rising ever since. These are the daily flows. You can see that we're getting something like $40 or $50 million of flows into our Solana ETF on an average day. Not every day. Some days there have been very little flows. There have been no days of outflows, but 30 or 40 $million. This next slide didn't turn out, doesn't cover, it covers actually that whole period. So I want to put it in context. Since those first ETFs launched, before Bitwise came onto the scene, we haven't quite caught up with the amount of new Solana being produced. But if you look since we launched, it's something like 3 or 4x. So right now, the Bitwise Solana ETF is buying 3 or 4x the amount of new Solana coming into the market, and more demand than supply tends to lead to higher prices. This is the last slide I'm going to show on ETFs because this is the most important slide. This is actually a slide of gold ETF inflows. And what I want you to take away from this chart, when the gold ETFs launched in 2004, they were the second biggest ETF launch of all time, right? Sort of the early version of tokenized gold. Everyone was very excited. They did $3 billion of flows in year one. But look what happened in year 2, year 3, year 4, year 5, year 6, actually out to year 16. The flows continued to go up. And this is what's going to happen in ETF land. I would ask all of you to think, the first time you bought Solana, have you bought any since? Or did you put it all in the very first time you invested? The same thing is happening in ETFs. So the flows that I just showed, where Solana and Bitcoin ETFs are buying more than 100% of the supply, that is going to continue and in fact accelerate over time as we open up these new markets. I have 30 seconds left. I'll just close with this. Bitwise is just one small piece of the puzzle, but a fun thing to say is we do 15,000 meetings with institutional investors every year. And I can tell you that often Solana comes up. We don't have much time to make the case for Solana. As I mentioned, the average person spends 3 minutes on crypto. But generally speaking, I think there's a very easy case to be made to these institutions. You can say that Solana gives you 2 bets at once, and this is why it's, I think, the most exciting opportunity in crypto right now. It gives you exposure to the growth of stablecoins, tokenization, DeFi, and other aspects. That's an enormously attractive growth, right? The SEC chair said the amount of AUM in tokenized stocks could 100,000x in the next few years. That's an enormous bet. And then you also get this second bet, which is that Solana is going to take an increasing share of that market. If you get both of those bets right, it's not 1 + 1 = 2, it's 2 × 2 = 4, or 3 × 3 = 9. It's exponential growth. And I think that makes Solana the most exciting opportunity in crypto at these current prices. And we love telling institutional investors about it.
This brings us to the bigger picture. Crypto today is roughly a $3.1 trillion market. That sounds big, until you compare it to the broader financial system. Global equity and fixed income markets together are worth over $260 trillion. Crypto is not the center of the financial universe. It's a small planet orbiting a massive solar system. And Solana? Solana is a moon on that planet. That's why institutional adoption matters so much. Even a small allocation shift from traditional markets into crypto can have an outsized impact on prices.
Everyone in crypto feels really good about the size of this industry. We're a $3.1 trillion industry from a market cap perspective. The first reason ETFs matter is that actually we're like a tiny planet in a broader solar system. That's the size of the equity and fixed income markets, massively larger. That's why this question of when the institutions are coming matters so much, because even a little bit of capital from this $260 trillion investment market going into our little $3.1 trillion market would have a big effect. And of course, Solana is like a moon on the planet crypto, right, amidst this broader solar system. So it is a really big deal. The second reason ETFs matter is this is a chart of ETF assets. I know this looks like a crypto chart. It's up only, but this is a chart of ETF assets since 2003. They're the fastest growing financial product in the world. ETFs added more AUM last year than the entire size of the crypto market. So ETFs really do matter. This is how the largest institutions work. The reason they do it is because they're easy. I know a lot of people wonder, why do institutions use ETFs when they could just own the asset natively? This is a study we do. We ask thousands of investors every year, how do they want to invest in crypto? These are the largest institutions, family offices, financial advisors in the world. We've done it for 8 years. Every single year, it's ETFs at about a 70% rate. This is just what they want. It's what they know. And so it's how they want to invest. Again, you may wonder why. Financial institutions and financial professionals don't spend all of their time studying the markets. This is from a study that looked at how financial advisors spend their day. They work about 55 hours a week. They spend 5 hours of that on investment management. A lot of people think of institutions, particularly financial advisors, spending all day studying the markets. They spend 10% of their time studying the markets. Their average allocation to crypto might be 1% of their portfolio. That means each week they spend 3 minutes studying and thinking about the crypto market. That is actually how the numbers knit out. So why do they like ETFs? Because they know them, they trust them, they make it easy, and in 3 minutes they can buy it. The last one is that ETFs are just a great tool. This is a fun fact about ETFs, which is not true in any other area of the market, which is that you or my father can literally buy the same ETF as the Harvard Management Company or leading sovereign wealth funds around the world. That's pretty cool. That's true in crypto. We can buy the same Bitcoin, we can buy the same Solana as the largest institutions in the world, but it's not true in most of the investing world where we don't get access to it. So it's easy, it's a high quality product, it solves all of the use cases, etc. All right, how do ETFs work? Someone asked me to do this because not everyone understands how ETFs work. I'll give you the 1-minute version of a talk I gave 1,000 times, which is about 45 minutes long. ETFs are relatively simple. So an ETF like BSOL will trade on the NASDAQ or the New York Stock Exchange at a value. Let's say it holds $25 of Solana for every share. And it should trade at $25. And usually it does. But if a bunch of people want to buy BSOL, it will trade up to $25.01. And there'll be this slight arbitrage. When that happens, institutional market makers create more shares of Solana by sending us cash. What do we do with that cash? We take it and we buy Solana, usually from institutional market makers. We put it in cold storage and we stake it. We sell shares of that ETF to these institutions at $25, and they sell them in the market at $25 and a penny. That brings the price back down to $25 so that the price always equals the amount of Solana that we have in the fund. That's been working in ETF land for 30 years, and it works more or less perfectly.
ETFs aren't flashy. They don't trend on social media. They don't make headlines every day. They don't feel exciting. But they quietly channel trillions of dollars. And right now, that channel is opening wider and wider into crypto, and into Solana specifically. If history is any guide, ETF-driven demand isn't slowing down. It's just getting started, and the market hasn't fully priced that in yet. If you found this breakdown valuable, consider subscribing for more deep dives into crypto structure, institutional flows, and long-term narratives, not just short-term noise. Because the next wave of crypto returns won't come from hype. They'll come from structure, and ETFs are the structure.